Let's go to Chicago and find out what is going on. What are the traders talking about? We have Scott Gecas joining us now. He's with the Fox Group. And, well, I tell you what, Scott, that was not necessarily what farmers wanted to see when they look at the pricing structure today after a USDA report that had been much anticipated.
Yeah, with that report, it was pretty much in line with pretty much across the board, corn, wheat, as well as the beans. But that was expected. We didn't really expect any fireworks, really, especially with everything that's been going on with the USDA, whether or not they're reporting solid numbers or not. But either way, going into the last report yesterday, we didn't really expect much. So that's the main thing that we've been looking at. You're seeing a little bit of weakness pretty much across the board as expected. The big focus today is definitely going to be on the FOMC meeting. That's taking center stage pretty much across all the markets. But the wheat market, they had a little bit of a bright spot with the report. That was their numbers came in, the ending stocks came in a little bit above the average and above the range. So that was a little bit surprising in the wheat market. But when you're looking at all the markets across the board, the weather's definitely had a huge effect on it. We're still trying to get production numbers. They're all over the place. No one has any solid, even private estimates as well as the USDA. We can't get a solid number for production estimates. So that's going to be determined with that report in January. A lot of the traders and farmers that we've been talking to are already focusing on that report next month. So we're going to be focusing on that. Keep an eye on the headlines. Trade war talks are supposedly getting closer. So that's going to be the driving force between now and the end of the year. So we'll have to see.
Okay, and that's very true. We'll come back in a moment and we'll dive into this livestock trade as well here on a Wednesday. We're talking with Scott Gecas. Don't go anywhere. We'll be right back. Thank you for joining us. We're talking with Scott Gecas right now. He's with the Fox Group, and he's at the edge of the trading floor in Chicago. Now, let's turn our focus to the livestock trade here, Scott. And USDA yesterday, they had their WASDE report, and there was a mention that they had reduced their forecast for 2020 beef production by 35 million pounds, and some wondered if that would support the live cattle trade today, and it looks like it is. We have the February live cattle now at 125.25, and that is up 67 cents right now. We're within a dime of our high of the day, and we're basically about 80 cents or so off of our earlier low this morning. Right now, April live cattle are up 60 at 125.65. On the feeder cattle market, as we switch over there, looks like they're gaining on the live cattle cousins once again, as that spread seems to be correcting itself a little bit. We have that January contract 97 higher at 142.63, March up 88 at 143.40. So it looks like the gains get a little less as you go further out in the table there. Now, if we look at our lean hog trade, this is one that had some big gains yesterday. And today, everything's all mixed up. It's just a jumbled affair. December up 7, February down 45 at 67.53 right now. April down 15 at 74.05. And then you have the May 40 higher. All right, let's start on the cattle side here. Cattle improving again on the day on the futures. Some folks were wondering if that market had been overbought, but it has really flattened out recently. What does that mean?
Yeah, well, everyone's been saying that the cattle market's been overbought for quite some time, but yet it still holds steady. That trend still remains to the upside. That 125 level is a huge level. We got to keep an eye on that. We expect a little bit of push one way or the other, depending on which way it's going to close. Now, you mentioned that 2020 production is expected to be lower, adding a little bit of support to that price. But the fourth quarter production this year was a little bit higher. So you're seeing back and forth action with that. So we were just going to be keeping an eye on the cash. If we see a dip in the cash, we could see some heavy liquidation. So that's what's going to drive this market is the cash trade. So we've seen about 118 to 119 recently. So if we start pulling back below that 118, 117, start seeing a little bit of drop in the cash, you're going to start seeing some of the funds starting to see heavy liquidation. So that's what we're going to keep an eye on as far as the cattle goes. And as far as the hogs go, it's just we have heavy supply, too much production, not enough demand, even though that China still needs U.S. pork. The tariff waivers are supporting a little bit. That's why we had the jump yesterday. But we have to see if we're going to get a phase one deal done. If we get that phase one deal done, we expect that import campaign to China ramp up, continue to grow. But until that point, we're just going to wait and see what those numbers are going to be.
Thank you, Scott. I appreciate that. Scott Gecas with the Fox Group. He is in Chicago there at the edge of the trading floor.